Hello everyone, this is Ryan Mallory for SharePlanner coming to you with another market wrap-up where I go over the day's general market action through the ES, through the Dow, and through the Nasdaq, and then also some more interesting setups and charts in like the equities and some commodities as well. So let's go ahead and start right off with the S&P E-mini contract. Right off the bat you can see we popped higher at the open but did nothing but perpetually sell off throughout the day. It wasn't a heavy day of selling, and there wasn't a sense of panic in the selling at all. There wasn't these major swoops lower, but what you can see though is I thought maybe when the market opened here today that you would see this here possibly be like a left shoulder followed by a head and then a right shoulder, creating an inverse head and shoulders pattern, and then we rocket higher. We didn't really get that. Instead, what you could say that today's price action resembled was more like a bear flag pattern. So you get this bear flag action and then you break down lower, and then when you zoom in enough on it, you'll see that this is more like a your inverse head and shoulders pattern that you got. You got your left shoulder there, you got your head here, and then you have a right shoulder there. So, and then we break the downtrend that we had seen overnight, and then we break higher into the close. So while we still finished lower on the day, it was a pretty healthy move by the markets to show that the bulls were still in control overall. So you have to like what you see from a bullish standpoint. The market doesn't look like it's trying to give up any of the days or the gains from last week, only a minimal amount. And wouldn't be surprised to see us push a little bit higher tomorrow, quite honestly. Let's look at the Nasdaq. And here on the Nasdaq, and I'll go ahead and pull up the daily view on this one. You can see, as we've talked about in the past, just an incredible upward trend line here that just recently got broken. But despite it getting broken, it really didn't send a lot of scares into the marketplace, because what you essentially got was this nice run up followed by a slight pullback with a bull flag. So during this time I was bearish, and I thought that we would probably go lower, but when we started getting moves like this after the Apple's earnings that basically pushed us out of this bearish or bullish flag pattern, it was hard to stay really bullish on the overall market as well. So you got this nice pop out. We got a consolidation today. I'm not really seeing much to worry about in terms of general market action. So we sort of settled right down there at around a minor support level today. You can see here we've tested it all throughout here, and then again in the last 2 days. So decent support where we're currently sitting at. Like I said about the S&P E-mini contract, I think it's likely that we'll probably rally in the days ahead. Today was a nice healthy consolidation pullback for the markets. And then you got the Dow as well. So Dow looks pretty good. Really didn't suffer nearly as badly over the last few weeks as some of the other indices did. You can see here that we've got almost like a triple top that occurred previously, followed by the sell-off, and then we're right back at those highs. So it's going to be imperative that we do break through these in the coming days. You don't want to see any nasty spikes over like what we saw here about a month ago, where we sold off hard and heavy after testing these highs. Instead, if we don't break it right away, you want to see some healthy consolidation right underneath these highs. And let's look at some gold here. Gold, like I've been saying, we are in more of a wedge pattern than anything. I think the trade is to the long side unless we break below the trend line that is currently established in the gold contract. So you can see here, tested there, and there as well. So if we break below this area here, and I'll put a nice little circle there so you know what I'm talking about, right there. If we break below this area, say like 1625, go short. I would not try to hang on for dear life with your gold contract at that point. You do have a little bit of minor support or resistance that needs to get broken as well, but I wouldn't pay too much attention to that, because if we can get a decent bounce off of this, it should take us right through that resistance level I just noted. So zooming back out, you can try and hold it, and I think when I did my market wrap up back on Friday, I said that there's about $85–90 of upside here, about $40 of downside if it breaks below the 1625 level. Get out. But yeah, there's definitely a lot of upside though if you can, hold this position on into around the lower 1700s, like 1725, 1730. And let's look at some crude. Most notable, I've pointed this out before, the bear flag that we've got developing here, and you can see today's action. It tried to go down and test that support level, but it did not. Instead, it rallied right back to where it pretty much closed on Friday. So really a non-event today for oil, but still, don't get short yet until it breaks below this minor support level here. Once it does, then you have a confirmation of the bear flag pattern, and you'll want to get short right away. Now, some of the equities that I've been paying attention to, AMKR, I actually sold out of this one today. You might ask, why in the world did you get out of it? It's got some great candles. I got in at 554, so I got in right as it was breaking below. Oops. I got right in, right as it was breaking below the support level here. A little bit late to the party, but not too much. And then today we got the big swoosh lower, and I could have held on. I mean, we were getting closer to some support here at 511. You could hold on for another 1.5%, but is it really worth it at that point to risk the gains that you had overnight? Because let's face it, this thing is due for a bounce at this point. I mean, that's 2 solid strong days going from as high as 592 down to 511. So you're getting close to like 15–16% correction in this. And so if it does get a bounce, not that it's saying that it would, but if it did get a decent bounce out of it, you could see this thing push, erase the day's gains quite easily, and then all of a sudden you're red. So you could take a half position off. In this case, I took the whole position off and moved on to the next trade. Worked out great, and I'm happy about it. Once again, I got out at 520 from 554. HBAN, I got into this one late in the day. I got in at 666. I like this one. It's already broken out, but here's what I like about it. You see this here? Nice healthy pullback, or a breakout here, okay? You got about 2–3 days of marching higher, and then today you got a pullback when the market showed some weakness, but it didn't stay down for very long. If you look at the 5 minutes here, you'll see pushed lower and then came right back up. So I like what I'm seeing on this stock here. And so I got in at 666. The ideal entry probably would have been if I could have gone around 661 or so, but I just wasn't sure I was ready to get in at that point. Once I saw that the market was going to hold its own on the day, I decided to start and create a position. Actually, it was a full position. So, and you can see the integrity of this recent uptrend is still in place. So overall, I like this stock. I've got a stop loss of 648 and a target of around $7. Don't know if it'll get to that in anytime in the near future, but if it did hit that $7, I'd take my gains right away. And I sold out of Liz today. The stock didn't go as well as I would have liked for it to. I got out at 1364 for a 1.8% gain. I got in at around 1340, and you could easily make the argument that I could have, gotten out around $13.90, $14, but I was wanting to see. I felt good about the way that the market ended on Friday, that there was a good chance that we could see an up day, so I held Liz over the weekend. It didn't give me that, so I had to get into risk management mode. I wasn't going to let a strong winner turn into a loser, so I got out, and it was still a gain. So I mean, there's nothing wrong with that trade. SEMO, a perfect example of a trade that did not work out. like I would have liked for it to today. This was a bounce play, and the reasons for jumping in it at the time were solid. But you can see here, when I got in, it was around 1772. Now, I'm not holding this anymore. I got out well before it hit 1702. In fact, I got out at 1724 for about a 2.7% loss. So it's not the kind of loss I like to take, but overall, I mean, I still came out positive on the day. I had a strong gain in AMKR, had a minor loss here in SIMO, and that's, if you notice how I trade, I mean, I'll take losses here and there, but overall on the days I'm usually up just because I'm managing, you know, a number of trades and getting out when the getting's going good. So so SIMO, I bought in right here at around 1772. I thought the market might bounce and that this one would go with it, but as you can see here, it just, you know, deteriorated, you know, quickly thereafter. So got out of that trade with not much of a hit at all. So a couple that I'm still watching, KCG. This one intrigues me, and I've traded this one already for a small gain. But you look at this thing. Every time it touches this resistance level, it sells off mad and hard. I mean, look at this thing today. I mean, it goes from like 13.14 all the way from 13.50, and it keeps doing that. You can see it happened here. So let me mark these things. You got it here. You got it here. And then you got it like 4 more times. So there is a lot of psychology here at this price level here, at that 13.50 level. I mean, every time it touches it, it sells off hard. I mean, it sells off a good $1 every time. And in this case, it really sold off about $1.50. So I don't think I'd want to get in at this point here. If we could sell off and bounce back up, I'd be willing to try it and see if we can make it 7 times where it can't break through that level, because at this point there's a lot of selling that's going on every time it touches that level. WDC. This is a bounce play I didn't take today, but similar to SIMO. Of course, you don't want the outcome to be the same. It's got a similar setup here. So you look at this here. There is a lot of support at this price level here. I mean, it's tested it here, and then back again in February. I mean, we've got support all over the place. Yeah, it did break below there, but you know, technical analysis, it is not a perfect science. I mean, you have to use some discretion in there, so you can't completely discard a stock like this just because it dips just a shade below the support level, because basically it dipped below for 1 day and came right back up. So the question becomes, is this going to be another, you know, wrong arrow there, is this going to be another buying opportunity off of this support level? I think it is, and a good chance if we see some weakness tomorrow at the open and this one follows suit, I may try to get in as close as I can to that 37, 75 level. I don't think I'll get right on it, but if I can get like 38, 40, I'd take it. So, and we will look at one more, AXS. This is a short setup here that I do like. You might not see what I'm seeing right at first, but when I zoom in here, you'll see exactly what I'm talking about. You got this uptrend, right? Perfect. You tested it multiple times, 1, 2, 3, 4, 5 times, right? And then, in fact, I haven't even said nothing about this before, but you got a support level right there as well. And then you get a sell-off that takes us well below this trend line here. It takes us below the support level, albeit a little bit, but still, even though it closes, you know, a lot higher off the lows, it still manages to close below this support level and that support level. And then you get a rally today. I don't think it's a game changer. I don't think it's something that you have to say, oh man, this thing is not going to go back down. It may very well go up. I'm not ruling that out either, but I still think the odds are is that testing this underside of this trend line here, it's going to run into resistance and continue the trend lower. So this one is another one. If it shows that it's going to retrace after retesting the underside of this nice trend line here that it's recently broken, then I'll get short and see how low it'll take me. And then I'll place my stop probably at just above the day's highs from today, or if it opens higher tomorrow and then comes back down, then I'll put the stop loss below the highs or just above the highs from yesterday. So there you got it. You got a general feel for where the market's going and where it's been, and then we went over some of the trades that I made today, the winners and the losers, and then some stocks that I'm looking at for tomorrow. So hopefully I made your homework for the market open tomorrow a little bit less, and that you've got a little bit better of a feel going into the day. So if you have any questions, feel free to email me at ryan@shareplanner.com, and I'll see you all tomorrow.